Let's get in Vishal Goyal, Executive Director of UBS Securities, to talk about his sense of, one, the SBI numbers, but two, as a result of that, what's happened to the other banking stocks and how does he view some of these. Vishal, great having you. Thanks so much for taking the time out. SBI numbers, the stock has rallied 6% in Friday, 3% today. How do you see the numbers per se? Do you think the margin performance is sustainable?
No, I think margins are looking fairly stable now, but I think with decline in rates, you typically expect PSU banks margins to decline. So that kind of compression you can expect even for SBI. But I think on the asset quality, definitely they have turned around very good numbers. And given the pressure on the economy, I would expect these numbers to, go up slightly over the course of the year, but not dramatically.
Right. Does SBI look attractive in terms of fundamentals and valuations? 1.1 times price to book 1 year forward?
No, I think we have a buy rating with a price target of 2700. So we have been pretty bullish on SBI for some time. It's been our top pick. We are almost 15% higher than consensus in terms of earning estimates. So you can see that our numbers are clearly showing that how positive we are on SBI, and we are likely to maintain.
You have initiated coverage aside of SBI on OBC as well, Vishal. What's the view on the bank post the results and, of course, looking at the valuations as well?
Actually, it's initiated by my colleague Ajitesh, but yes, we also upgraded PNB and BOB to neutral from sell. And in the whole report, actually, we have talked about how the valuations have actually become very cheap. And even when we stress the earnings for the relapse risk from restructured loans, still you get ROEs of 16 to 17% for these PSU banks, and you also get dividend yield of around 5% to 6% in some cases. So that's the reason why we have changed our view from negative to kind of neutral, positive on PSU banks as a group. And on that OBC, I think Ajitesh has got two key reasons. One is cheap valuation is 0.5 times book. Second, I think the management transition has already happened, and they have been showing very weak asset quality number, expecting slightly better asset quality, and again the dividend yield there is like 5%.
Okay, then let's talk about the other two that you mentioned that you have upgraded. Bank of Baroda is one, when you have upgraded it to neutral. What's the view there?
I think if you see, BOB results have been very weak, and weak especially on asset quality. And that was kind of expected by us. That's why we had sell rating, because we were expecting BOB to catch up with other PSU banks. And post results, the stock is also corrected, I think almost around 10% plus. And now when you look at the valuation, it's trading close to 0.8 to 0.9 times book, which we think is again becoming attractive. Though it's not a buy, but I think definitely not a sell right now. And that's the key reason to upgrade the stock to neutral. I think that's on the BOB.
You have upgraded Punjab National Bank, from a sell to a neutral with a target price of 700. What's your view on the bank post results and on valuations?
I think PNB has been reporting again very weak asset quality overall for some time. The last quarter was also very, very weak again. Stock corrected, I think almost more than 10% post results. The stock has come down to 0.8 times book, and it is not far from its trough valuation. Now when we stress the PNB's ROE for the restructured loan, NPL, etc. for next 2 years, we found that they are still doing 16-17% ROE. So 0.8 times book for 16-17% ROE we thought is reasonable. That's the key reason to upgrade the stock. I don't see asset quality to improve a lot for PNB in the near term. So it's called more on valuation and on stressed ROEs.
So then just to sum it up, for your PSU argument, what's the top pick? One, in the large cap PSU basket, and two, in the mid cap PSU banking space?
SBI is definitely the top pick among large PSU banks. And the reason you are seeing the results are clearly improving there. Second, among mid-size, we like OBC. We just initiated. It's 0.5 times book, and things would be improving there. That's our expectation.
How do you see the banking sector in terms of valuations when compared to 2008 valuations? Does it warrant a re-rating, especially after State Bank of India's numbers?
No, I think on valuations you need to see, I mean, we look at last 5 years averages and last 5-year trough and all, which is obviously capturing 2009, 2008 downturn. There, most of the banks are right now above the trough valuations, but are almost 30 to 50% below the historical averages. So they are, let's say for example, most of the banks would be 20% to 30% above the trough valuations. Except maybe some like banks like BOI and Union Bank, which are pretty close to trough. PNB is like 10% above the trough valuations. Otherwise, I think most other banks are 20-30% above trough valuations. So I don't think they have reached the trough valuation, and I don't see right now a reason for them to go to trough valuation, and therefore that is not the base case. In terms of re-rating, I think you need the economy to improve a bit for all the re-ratings to happen. And that again, I mean, one reason can be falling oil prices, and other reasons could be maybe with government taking some action, your investment climate improve. That is the other way to see a catalyst actually for re-rating.
Okay, lastly, since we spoke at length about the PSU banking law, Vishal, what about the private banking space? ICICI, Yes Bank and Federal Bank, I read your report, are amongst your top picks in the private sector. Why these stocks? Give us some color out there.
Yes, I think ICICI we like. One is valuations. It's like 1.2, 1.3 times book. Second, if you look at the ROE profile is improving for them. Their business metrics is improving. They are doing much more sensible business this time around. They've been, I think, not growing aggressively, especially in the downturn. And also, I think if you look at over next 2 to 3 years, I am expecting their ROEs to move 1.5% each year, and very well capitalized. That's the key reason to like ICICI. On Federal Bank, very good management. I think they are trying to turn around the old private bank into a new private bank, and I think they are successful in terms of doing the restructuring of their risk management, which is showing up in their asset quality numbers. Second, they are doing a lot of work on branches, plus also on their fee product, which is yet to be seen in the numbers. And lastly, I think on valuations, it's 1.1 time book. So it's, I think, available cheap. It can turn around over next 18 to 24 months as the cycle or environment improves. I think Federal Bank would definitely re-rate to 1.5 to 1.7 times book kind of a bank. Yes Bank, the reason we like is they are getting very strong traction on CASA, especially the savings bank account. And I think over next 2 years they can go up to 25% plus CASA, which I think would again re-rate this particular bank, which is right now wholesale funded. So it will have a respectable retail deposit base by that time. Plus on asset quality, they have been showing very consistent numbers, and they have a strong control on their asset quality. So that's the key reason to like the Yes Bank.